Applying for a finance role? These 15 MCQs will test if you can think like a real finance pro. Question 1. You notice a calculation error in the financial report sent to the CFO. What's the best next step? The correct answer is inform your manager immediately with suggested correction. As financial integrity requires accountability and transparency, especially in reporting. Question 2. A colleague asks you to adjust numbers slightly for a better quarterly view. What do you do? The correct answer is refuse politely and document the request. As ethical decision-making is vital in finance, manipulation, even minor, is unacceptable. Question 3. You're asked to explain a complex financial concept to a non-finance stakeholder. What's your approach? The correct answer is simplify the concept with real-world analogies. Clear communication with non-financial teams builds cross-functional trust. Question 4. Which metric is most relevant to evaluate a company's short-term liquidity? The correct answer is current ratio. Where the current ratio, current assets by current liabilities, reflects short-term solvency. Question 5. A client deposits 1 lakh Indian rupee by mistake. What should you do first? The correct answer is inform your manager and client, as misappropriation is a serious offense. Ethics in finance start with integrity. Question 6. Which of these documents shows the company's financial performance over a period? The correct answer is income statement, where the income statement tracks revenues and expenses over a specific period. Question 7. Your senior is pressuring you to backdate an invoice to meet revenue targets. What should you do? The correct answer is decline and report the situation, as backdating for revenue recognition is unethical and can lead to legal issues. Question 8. While reconciling statements, you find a 500 Indian rupees discrepancy. What action is best? The correct answer is investigate the reason and document it. Even minor mismatches could hint at deeper errors. Accuracy is critical. Question 9. Which financial ratio helps investors evaluate profitability? The correct answer is gross margin, where gross margin shows the percentage of revenue left after COGS, key to profitability. Question 10. What's the golden rule of double entry accounting? The correct answer is for every debit, there must be a corresponding credit, as double entry bookkeeping ensures the accounting equation stays balanced. Question 11. A colleague is struggling with a finance tool you've mastered. What do you do? The correct answer is offer to help them after finishing your work. Finance teams work better when collaboration and knowledge sharing are encouraged. Question 12. Which of the following is not part of working capital? The correct answer is fixed assets. Where fixed assets are long-term assets, working capital includes only current assets and liabilities. Question 13. If the cost of raw materials increases, how should it reflect in your financial analysis? The correct answer is increase in COGS and decrease in gross profit. As raw material cost affects COGS directly, lowering gross profit unless price is adjusted. Question 14. Which financial statement helps assess the company's cash handling ability? The correct answer is cash flow statement, where the cash flow statement tracks inflows and outflows to assess liquidity and solvency. Question 15. You discover that vendor payments are delayed repeatedly, affecting relationships. What do you do? The correct answer is alert finance lead and suggest reviewing cash cycle. Proactive cash flow management and vendor relationship handling are crucial in finance roles. Like, subscribe, and share to keep learning with Skiller.